So tomorrow we have quite a variety of news. Let's quickly discuss that. So tomorrow we have CPI, Australian CPI, which CPI the forecast is 3.5, which might still give a very good bullish move if it comes out as expected, but stronger. That might push the interest rate cuts for the Australian for Australia quite away from current now. And then that was in the AMs to tomorrow morning. If you're looking at South African time, we also have Canadian overnight rate. Okay, BOC statements as well. But again, the one that I'll be streaming tomorrow. Anyway, I'm recording this 10 p.m. South of 10:43 South African time at night. I was trading the close. So if you want to show me in the close, just follow me and follow, subscribe and like. And just click the notification bell. Maybe you can trade with me every day. But anyway, let's get into it. FOMC, this tomorrow interest rate. Oh, sorry, interest rate decision. There's also FOMC again, but the interest rate decision, they look like they've already priced in at 3.75. And what does this mean for the Australian, for the dollar and other currencies? I think because of AUD Canadian, I'm not really interested in that, but also FOMC. What really could we be interested in terms of macro so far? And I think earlier on I spoke about this, that Australian dollar against Australia against the dollar are still bullish. It's still bullish. Let's look at. I don't like how it's moving. I'm just gonna put it here so it moves faster. Okay. Okay. Let's see. Australian dollar against the dollar. We have the dollar against the Japanese yen. And then let's see what will it really affect. Let's start with the dollar. Yeah. Come on, man. Yeah. So the dollar FOMC meeting. Remember the FOMC meeting, according to me, they're not gonna cut rates. And I'll explain why. When you look at the jobs market, it looks a bit bad. It's not yet stable. Remember, the reason now the Fed will be cutting rates is to stabilize the dollar, but now it looks a bit bad in the jobs market. So they might push the interest rate slightly away. That's why we already have priced in 3.75. We look at Joel's opening, we got a miss. You look at ATP, we got a miss. NFP, oh, look at that. We got a miss. My piece is low. We got a miss. And then we look at PPI also. We got a 3%, whilst our target was 2.7, which also it's saying inflation is still a problem. So I'm assuming the Fed won't really want to cut rate as fast because they still need to stabilize, even though they want to save the jobs market, but they still have to stabilize. They still have to stabilize the inflation. I'll look at inflation now, but let's look at Australian dollar now. And also the Australian dollar, they will have to push away. They might not have to cut rates currently. And we know the Feds, we have already starting to price in for the rate cuts in the Fed side. When you look at unemployment rate, which has decreased, which is good. Jobs market looks good. PPI inflation is a bit of a Every time. Inflation is a bit of a problem, and I've discussed that as well. Why I'm thinking inflation is a problem. But when you look at the Australian dollar, it's a bit stronger compared to uh, compared to the US dollar. And then with that, we can also look at just gonna look at inflation data first. We look at CPI data in the US, and you literally see that we have shaky CPI, even though we still at 2.7, but it's not trending lower towards 2%. Remember, the target is 2%. The previous one was 2.7. So if the Fed maybe, I think now they won't cut rates, because if they cut rates, it might push inflation still higher, even though the labor market is bad. Oh God, I'm tired. But I should say that the GDP is doing quite well. It's a very stable, very resilient economy in the US. Look at that. The forecast was 3.3, what 4.3? We got exactly 4.3. There's no miss, which is like a very good GDP number. And when you look at retail sale as well, we're still getting good retail sales. So this is an indication that the US economy is still resilient, as much as there is fear for the labor data. And when you look at the labor data, we have to firstly look at the NFP data, which look at that move. It's about 50,000, the previous one. And this is the data that the Feds are really, really worried about. That's what the Feds are worried about, by the way. So you look at it's 50,000, and then when you look at unemployment rate, it was trending to the upside. So now unemployment was trending to the upside, which it's also a worry, even though it came by at 4.2, but to an extent, the unemployment at some point, I'll look at this another time, it was at about 3 point something percent. Now there is this uptrend to the unemployment rate, which it is a problem. I don't think the Fed will want to cut rate now, because if they cut rate, yes, it might save the job market where people there will be quite a lot of hiring, but also you need to take note that it might put a strain. It might put a strain in the CPI story. We might start to see CPI going to the upside. So with FOMC tomorrow, oh God, I'm tired. With I'm tired. With FOMC tomorrow, we have already priced in what? We have already priced in exactly 3.75%. That is already priced in. And if that is already priced in, there is no need for the Fed to cut rates for now. The probabilities of they might keep interest rate, they say, just to monitor CPI with the labor data, because really, honestly, the economy is resilient. So for me, my prediction when it comes to the dollar and the dollar Aussie, I'll show you the technicals. And I think, also discuss that. Uh, let's just look at the interest rate data for the projections as well. Look at that. So now we're at 3.75, but or also when you look at our projection going forward, it's the US still gonna get already cut. So the first quarter of the year, we're gonna keep it the same. I'm gonna give it to you. Sorry. We're gonna keep it the same, but the second quarter, then we're gonna start cutting now. We might get the first 0.25 basis points cut in the second quarter, kept the same. So we might get one rate cut according to the projection. But my projection is maybe in the second quarter, we might get one rate cut. But for now, the primary forecast is the 10-year yield. I mean, look at that, what I'm saying. Look, sorry, my sign is disturbing me. Um, where was I? Where was I? Malali, you disturbing Didi. Where was I? Okay. Oh yeah, I said one red card for the year. Second quarter, we might get the rate just purely because we are trying to get hold of, or we are trying to save the labor data, but the economy is resilient, it's doing well, but we don't want the labor data to continue moving to the downside. So we save the labor data, but not cut rates aggressively, because once you start cutting rates aggressively, CPI will be a problem. Hold on for me. Oh God. Oh, I have my son, and this guy, he is pestering me, and I'm busy working. I mean, ah, say hi. Say hi and go. Say hi. Say hello. Hey, say hi. Say hi. Say hi. No. Oh, bye bye. Give me my phone and go to your room. Where's my phone? Malan, bring my phone and go to your room. Sorry about that. For those who are watching, the recording will be terrible. But anyway, sorry about that. Anyway, as I said, I am going to be looking at Australian dollar and look at the technicals I'll be looking into. But when forecasting the AUD now, uh, when you look at the Australian dollar, I'm just going to quickly discuss the Australian dollar. Oh, come on, dude. This thing is very slow today. As I said, Australian dollar, look at that 71% bullishness in terms of macros. You look at macros, you look at PMI retail sales doing well. Inflation is a problem, even though we're still going to get higher inflation, which high inflation might definitely delay. We might not get rate cuts, which means for me, I am more lying into the Australian dollar bullishness, and I think it might be continue to be bullish. That's what I'm lying on. I'm more bullish on the dollar. I mean, on the Australian dollar, not the US dollar. More bullish on the Australian dollar. Long term, the Feds might cut rates, but look at that. We're at 3.7 now. They're forecasting at 3.8, 3.7 as well. Let me just quickly confirm the forecast of the 3.5. We're at 3.4. They're forecasting at 3.5. There's something wrong here. This needs to be discussed. No, I will discuss this with the team. Am I confused? Oh, yes. Yeah, that was 3.4. They're forecasting a higher value now, which will be 3.5. Overall, it says that Australian dollar might not cut rates immediately. So I am more bullish into that. And a lot has been happening. But let's also, for me to determine if, let me look at the 10-year yield. Let's just look at the technicals and speak about the two. But I'm more interested in looking at the 10-year yield as well. 10-year treasury yield. So looking at the 10-year treasury yield, where's the yield? Looking at the yield, look, there's nothing happening. But we had that instant move push to the upside. And that move could be an indication that the Fed might be looking into saying we might not cut rates. We might keep rates the same, or we could be anticipating for a higher rate. But it looks like this has remained very stable. Yeah, I'll push to the upside, but now we're trending lower. Could we get any move one way or another? I don't know. So let's keep on watching tomorrow just before FOMC. We'll discuss this, but for now, it looks like we've been trading low on the 10-year yield, and it will be our determining factor if we are moving lower. But other than that, there's nothing. But as I said, when you look at the um, technicals, it's Australian dollar. Maybe. What's happening here? No, dude, I'm not respecting this. This is crazy. So I might look if we get a cooling, yeah, a weakness on the Australian dollar for now. Maybe we get a miss with CPI story where we get CPI at 3.3, come out at 3.3 because the focus is 3.4, 3.5. I mean, we get a 3.4 or 3.3. Maybe that will start to get a retracement lower, and maybe I'm going to look to go long on the support. Yeah, might look to go along on the Australian dollar on support, given the fact that I've just explained that CPI it's increasing there, labor market is good, the economy is doing quite well, so the Aussie dollar might be continuing strong. But if we get a miss with CPI tomorrow, we might be speaking about something else. Because anyway, the dollar, we are starting to price in for second quarter rate cuts, 25 basis points. Now we're just going to be looking at the labor data. We're going to be just fully focusing on the labor data, but clearly watching inflation if it's skyrocketing. Because if the Fed decide to cut rates very fast, like aggressively now, trying to serve the labor data, that might force, or the labor market, that might force CPI higher because anyway, the economy is a bit resilient now. So that's why we have this overstretch. But on the other side, we look at USD, JPY are still on a down move. Could anything change tomorrow when it comes to this pair? Not generally anything, unless we get a very big, uh, unless the Fed decide to say, I don't see any increase cut rates, that might push the dollar lower. So I don't see anything that will push us up to the upside for now. I'm just standing on the fence here. USD CAD, maybe there is something where I might look. Holding that, it's not in my radar in terms of macro. So Australian dollar and USD JPY, those are the one that I'm watching based on macros for tomorrow. So tomorrow, I'll see you 8 p.m. as we'll be trading the PM session. If you're watching this, please do not forget to like, subscribe, and give me your opinion as to what you think I do and what I should improve. Other than that, I'll be trading the FOMC tomorrow. Interesting day. I'll be trading the FOMC, including the minute. Do not forget to join me then. Then see you tomorrow, 8 p.m. Don't forget to like and subscribe and click the link and join on Facebook. We have our channel there where I'll be speaking my thoughts. Anyway, have a great day, guys. I love you all. Bye bye.